Now, we've got a great opportunity tonight to really have questions from the audience and to just move into some of the topics that have been outlined to us in some more depth. What I'd like those of you who'd like to pose a question is to come to either the front or the back mic, and then to be able just to give us your name and the speaker that you would like to ask the question of, and our speakers will be able to address those issues. I think while you're gathering your thoughts on such a wonderful array of material, I wanted to perhaps talk and address the question to Martin. Martin, you alluded to the changing value of carbon, particularly through that first phase one of the EU's emission trading scheme. And we saw consequences for a very high value and a very low value. Do you think that's removed confidence in carbon trading? And how do you achieve a sustainable value that the markets and microfinance companies, the developing world, can have confidence in?
I mean, it's a good question. I mean, I think for those who don't appreciate it, the Europeans, in designing their emissions trading scheme, decided that they would have an initial phase for 2 years called phase one. And their second phase was 2008 to 2012. In phase one, they over-allocated permits. So towards the end of that phase, the price in the market collapsed, and in effect, those permits went down to almost, I think, 20 euro cents. I don't think that has destroyed confidence in the market. I think at times that has been used by an excuse by certain politicians as to why the European scheme didn't work. But I think the reality is that with the second phase of the EU scheme and now moving into having plans for the third phase, there's plenty of confidence there. But what it shows is that we are creating artificial markets here. So unlike electricity markets or stock markets, all of which are susceptible to significant price variation, including the oil market, we're actually creating a market here around which is purely based in law and policy. So if we change the law slightly, the market can crash. So people need to be very careful how they do that. In terms of having a long-term sustainable carbon price, it partly depends on your view of the market. I mean, do you take an approach where you have a fixed market price, or do you have a market that's just free and open and linked internationally? I think for the Australian scheme, they've taken a view that to keep the price at a lower level to start off with, the government's proposed a fixed price to start and then a price cap for the first few years. So again, that's designing a policy measure in order to regulate the price. So I think overall, the real problem in terms of carbon markets and carbon pricing is how you design the markets and regulatory uncertainty. And in the lead up, at the moment, Australian companies did start to buy permits in the Australian market, but with the delay in the legislation, everybody stopped. So it's this sort of stop-start and regulation that creates uncertainty, and I think probably has more impact on price than anything else. But once we have long-term markets in place and operating, I think the pricing issues would be resolved.
Thank you. I was actually also going to ask April. April, in response to Stephen's presentation, is the provision of an individual economic base for a small community an end that will build the economic health of that community, the rising cost of mitigation notwithstanding? In other words, is this important enough to do independently of arguments to deal with cost shifting between developed and developing worlds and increasing the costs of mitigation in the developing world?
I actually think that Stephen's comments were very complimentary to what microenergy credits is trying to do. And, I wholeheartedly agree that, the climate change problem was really created by the developed countries, and they should bear more of the burden. And to the degree that the existing carbon trading schemes are only sharing the burden equally, there is scope for developed countries to step ahead and encourage further R&D and take a further role. And I think that can be done in a very complementary way to processes like the one that microenergy credits is promoting, working through microfinance institutions. So, for example, to the degree that further R&D is done in clean energy technologies, and better technologies become available, I would love to see those technologies then channeled through the microfinance institutions and finding new markets and reaching more people through the channel that's being established.
Thank you very much.